That could have been bad. So today I want to try something a little different and look into a live trade that I made and that I've already posted on YouTube, and then kind of just explain more so the aftermath, what happened after the live trade video was done, and kind of play the what if game, because I don't know about you, but it's always fun to play the what if game. Oh, what if I would have held? I would have made so much more money, or what have you. But in this situation, playing the what if game really kind of drives home a point that I think all traders always struggle with. Yes, it gets easier as time goes by, but it's always good to have reminders. And whether you're brand new or you're a veteran, reminders, understanding what can happen when certain things go wrong is good to see. So what I want to do is first we'll start off watching a live trade, and you'll see that I end up taking a loss on this trade. And then after that, we're going to cut directly to my desktop. I'm going to walk you through kind of the aftermath of things. What happened after the video was done rolling and as the remainder of the day cut away. And then we're going to take a look at some numbers and just see, it could have gotten very, very nasty compared to what it ultimately turned out to be. So let's first start off watching this little portion from the live trading video. Okay, going to try to short some TEV, that is at 35.69, risking about $40-ish. So this thing is either going to, and this is based off of actually another time frame that you don't see on the chart right now. So again, 35.69 order to short, and then risking about $35-ish. I say ish because there can always be some slippage, so it's never going to be exact. So first step's going to be getting up there to 35.69. Okay, you have 400. Okay, I'm all in. My stop is at 35.76. So this thing's just going to keep plowing on upwards, and I want out of here, or it's going to potentially roll back over. And yeah, the sky's the limit if it rolls back over. But if it keeps on going, well, my risk is capped. So we'll see what happens with it. I'm gonna pause it, and well, I'll keep it going as it looking like I could be getting stopped out here. It's getting awfully close, and not looking. Looks like the fat lady's warming up her vocal cords and she's out. So no slippage there. So $35 exactly. Losing trade. Yeah, this one's definitely very strong. Thought based on some of the other things that I was seeing that maybe it was running out of gas. Maybe it still is, but as far as I'm concerned, I'm out with the $35 loss. So let's go find another trade. Welcome to my desktop. I now want to give a little bit of, kind of a backdrop here so that we can play the what if game, and why it would actually make sense to play the what if game, and what I could, potentially see myself doing, and, just catching myself doing, and I'm not patting myself on the back here. But, that's, when you know that you're getting progress as a trader is when you kind of can recognize, oh yeah, I could see myself, trying to potentially be tempted to do that. So the main piece of backdrop here is check out this move from 34.70 all the way up to 35.70 in a very short amount of time. This is a line chart, and usually I use candlestick charts, but I want this to make sense for everybody, and I want to just convey the big concepts here. So no, I don't use line charts, but like I said, from a presentation standpoint, just want this to be very simple. But the point here, like I said, the big concept that I alluded to is this price movement was very, very overextended. So that's why I did what it did, and that can also be a pitfall of why things maybe could have gone differently. But as you saw, the price then went up there, and I was stopped out at the 35.76 mark. So just to keep track of things, of what actually happened, as you saw, I did ultimately get stopped out at 35.76 like you saw, and that led to $35 loss. So being disciplined, following the trade plan, admitting that I was wrong, saying, hey, Clay, you got this one wrong. You got to admit you're wrong and take a loss, as annoying as it is. That ended up with a $35 loss. But now let's transition over to the what if game. So what if I would have said, you know what? It's very overextended. Look at that, Clay. Look at how overextended it's got in such such a short amount of time. This thing is so overextended. Yeah, I knew that you said you wanted to get out for right around a $35 loss, but you know, this whole trade plan thing, I know it's tugging you right now. I know it's saying, come on, get out, get out, get out. But you know what? No, it's so overextended. And let's say, what if my attitude changed to that of a donkey? In other words, very stubborn. Now, am I becoming very stubborn because there's an ego and I don't want to admit that I'm wrong, or just I don't want to lose money, and I just, you know, the past 3 trades that I've made have all stopped me out, and then they've gone my direction. So, I mean, it's happening so much to me. I just want to stay in. So I'm going to get stubborn. I know I said I would get out, but no. It's so overextended. I want to stay in. And you're getting stubborn. You're having a donkey attitude. So let's see what happens with this quote-unquote donkey attitude. Now, before we continue with the what-if game, you know, this red line here represents where I got stopped out, or where I should have gotten stopped out. Because remember, now we're assuming, we're pretending that I got the donkey attitude, I'm stubborn, so I didn't get stopped out here. But this is where I could have gotten stopped out because this was my trade plan. So let's just see what happens. Okay, it goes up. Wow. That escalated quickly. Okay, it's going up even more. So let's just think about it. At this point in time, wow, I could have been out down here, but now the price is up over basically 35 cents more, 40 cents more than where I'd originally wanted out. But let's just keep on going. Now let's look at it. I mean, to think, could have been out here, but that donkey attitude, now the price is sitting up here. All right, let's see what happens. There we go. See, I knew it. Just had to hold strong. Look at that. Price is falling. I made the right decision by being stubborn, just like those other trades that I've had where I kept being disciplined and then the price would go in my direction. Finally, it's rolling back over. It's going in my direction. I was right to be a donkey. This thing will at least, you know, I won't even get greedy, actually, Clay. I'm not going to get greedy. I'll just get out for break even. So, you know what, Clay? Not even that. I'll just get out at my original stop loss because I don't want to be greedy. And yeah, I did kind of break the rule, so I'll get out at my original stop loss. Have you been there before? Have these thoughts ever gone through your head? Maybe not those exact thoughts, but something similar to that. I know they've gone through mine, and I know myself very well. I could see myself trying to justify holding because, yeah, the price is pulling back here. And you know what? I'm not going to get greedy and like actually go for a profit because, yeah, I did technically get stubborn. I did break the rules, but you know what? I'll just get out right here at my original stop loss. That's what I'm going to do. So let's see how that logic continues to work out. All right, bouncing a little bit. Okay, still. Come on, Price. What are you doing? You're supposed to be pulling back still. Why are you starting to head back up? Price, what are you doing? Hey, hey, I wasn't even getting greedy, Price. I said I would get out. Yeah, and then you start talking to the voices in your head. I've been there before. Hey, Price, what are you doing? Why are you going back up? Uh-oh, now we've lost our red line. So keep in mind that what that red line represents. And now, just like that, the price is at new highs from where it was. And just to reiterate, could have been out down here. Now look at all this space that stubbornness led to. So let's just keep on going. What in the... Okay. Okay. Okay, it's formed this range. And knowing myself, seeing this, I decided, all right, it's formed this range here. If it breaks out above that, then you know what, I just need to move on. And long story short, check it out there, all the way up there. Now, keep in mind, look how overextended this thing got. This all started down here at 34.75 basically, and it's gone all the way up there. So even at the original entry, I mean, it was already so overextended. But the point here being, things, you got to stick to the trade plan, and that's how eventually, you know, how high it eventually went. But let's just say that I would have originally probably got out right there on. So I'll give myself a little bit of grace. I'm not going to sit here and say that I would have sold the exact top, but we'll just say 36.85 is where I eventually would have, you know, capitulated and gotten out of the trade. To quickly recap things, you know, within our game of what if, I got in at 35.69. That's nothing new. I had the 500 shares, nothing new. But in this case, because of that donkey stubbornness, I eventually just said, you know what, I better get out now, and 36.85. A quick recap on the math here, that would equate to a $1.16 loss per share. Again, had 500 shares. So that loss would have ended up $580 when it could have been $35. And that's really just kind of the first wrinkle in all this. Again, I want to compound kind of the just wow. First level of wow. It could have been 35, but stubbornness turned into 580. But like I said, let's compound this a little bit. So here's a screenshot that I posted on Instagram and my Twitter and stuff, pretty much just commenting on, wow, this could have been a scary day had I not been for discipline. And then this actually prompted, oh, I should probably make a video on this. But this is how the day ultimately settled. But remember, we're still playing our what if game. So that would not be a 30 or negative 35. Right there would be what? That would be showing a negative $580. So let's put the negative sign right there. So that would be showing us a negative 580 right there. Now, I had some other trades, so at this point, it'll essentially be, okay, can I dig myself out of that hole? So the hole is what? $580 thanks to the non-disciplined trade, right? The bad trade where I broke rules, got stubborn. So let's see if I could dig out of this. So on EDIT, I made $109. So let's see, 109. Okay, still have 471 left to go out of the hole. Next trade was $75. Okay, 396 to go to get out of the hole. Next was 85. Okay, the next one after that was 180. And then the final one was 136. So minus 136. And I would have been in the green. I know that says negative, but remember, I was trying to get out of the hole. I would have been in the green $5. But there's a thing such as fees and commissions. So I would have been still red on the day. So yes, that first layer was, wow, it could have been $35. Now it's $580. But the second thing is it would have wiped out my entire day. Gone. All these green trades added up to over a $500 day. If you do the math, you would see that, and I'm assuming you'll take my word for it. But when it was a $35 loss, I had an over $500 day. So sure, that was annoying. It's always annoying to lose. There's no doubt about that, even if it's $3. I mean, most people that are in trading are competitive by nature. So whenever you lose, it's annoying. It's not fun. But to think that had I let that annoyingness, had I let that, oh, I don't want to lose. I just want to be right here. Let me just, it's so overextended. Had I broken the rules, that, $580 loss, it could have been more, right? Because the price could have gone up. And the other thing is, to pat myself on the back and something to give as a lesson is changing strategies. In this example, in this what if game, I just held. I didn't do anything else. I just held. I refused to sell. But sometimes strategies change in sense of, well, I'm gonna short some more. And then you build a bigger position and you build a bigger position. Or in other words, you're averaging up or averaging down, when that was never your plan going into a trade. My plan was, I want to get in, I want to get out. That was my strategy. I had different strategies where other times, yeah, I am looking to add, but that was never my strategy here. Had I transitioned into a different strategy and added, so instead of, that being 500 shares, what if that had been 800 shares? What if that had been 1,000 shares? 1,500 shares? That loss gets bigger and bigger. So things could have, I'm actually taking more of the conservative route with all these numbers because I'm assuming that I just took kind of the mild rule break and just saying, you know what, I'm not going to do anything at all. I'm just going to hold. Whereas in other cases, and maybe you've seen it out there on message boards where people just say, I'm going to keep buying more. I'm going to keep buying more as the price goes against them. Very, very risky, and that could have been an absolute train wreck. Even in this situation, the conservative what if still wiped out my entire day. Again, yes, I had $5 at the end, but when you factor in commissions and fees, that would have put me in the red. So one little rule break would have wiped out everything else. And the other thing that you're not seeing is the time value of money. What do I mean by that? Well, check this out. This all happened at basically 10 o'clock, give or take. When I would have finally decided, you know what, I got to just get out, that would have been literally hours and hours and hours later into the day. Time value of money. When my money's just sitting there because I'm so stubborn and I'm probably watching every single tick because I just want this stupid thing to go down, I'm losing out on what? Time. Or in other words, an opportunity to make that $35 back. So from that perspective, this image here is actually deceiving and not really realistic, because if all my attention is focused on TEVA the whole time, you know, maybe I would have made a couple of these, but would I have been able to capitalize on all these other different trades? Not if I'm being realistic. So what happens if, let's just say I wipe out, you know, the $75 one and I still make all these other ones? Well, now I'm in the red that much more because of that time value of money, the opportunity cost. By sitting here focused, you know, just watching every single tick, maybe I'm walking away because I'm so disgusted. I'll come back and look at it in 20 minutes. Well, that 20 minutes might have been the time when I could have traded, you know, Yahoo or, you know, OLED right here. So time value of money, something else that you need to keep, you know, in mind when you're thinking about breaking rules and just sitting there and watching and watching and watching. It can get, you know, it can be very nasty. So hopefully you see how I'm being very conservative. I'm assuming that I still would have made all these other trades. I didn't, you know, average down. I didn't do anything like that. I simply just didn't sell as the bad habit, as the rule break. And it still cost me my entire day. Hopefully that scares you. That's kind of pretty crazy in my eyes. Pretty crazy stuff, right? I mean, to think that had I gotten stubborn, had I let an ego get in the way, had I just not stuck to the original plan, right? Had not stuck to the strategy at hand, things would have been much different and not in a good type of way. So I fully get it, and I know I mentioned it already from the desktop, but yeah, losing is not fun. Losing is annoying. Nobody wants to admit they're wrong, but $35 compared to the different situations of how big that loss could have been, that $35 loss, as far as I'm concerned, might as well be a winner. So just be aware of that. Having a strategy is a great thing, but you know, even getting a strategy, that's still only a portion of the battle, because then come the mental games of needing to honor the strategy, needing to follow through with it. So keep this in mind. You know, I hope the next time you're thinking about trying to get fancy or get stubborn or let your ego in the way, you just think of TEVA, TEVA. And remember what could have happened, I should say, had I gotten too fancy or gotten stubborn with this trade. Hopefully this helps. And yeah, remember, TEVA. If you are interested in trading alongside me and other traders, then I do offer a private trading community known as the Inner Circle. So the two images that you see on the screen, the one image, if you click on it, it will take you to the Inner Circle page and give you all the details about it. The other is going to be a behind the scenes tour that I personally give, so you can see exactly what you are going to get with the subscription. So if that sounds like something that could add value to you as a trader, then go ahead, check it out, and by all means, let me know if you have any questions.